Hello and welcome to the special series on budget. Today we are going to decode the budget document. The finance minister has spoken a lot and announced many measures specifically in the budget 2025, and I have here with me top speakers, or must say the leaders, the practitioners of the finance world, going to tell us what is there in those documents. So let me welcome all the top speakers that I have with me and introduce you to you. My first speaker for this particular session is Mr. Tapan Singhal, the MD and CEO of Bajaj Allianz General Insurance. Tapanji, glad to have you.
My honor, Amol. It's always a pleasure talking to you.
Thank you. My next speaker is Mr. Indranil Pan, the Chief Economist of Yes Bank. Indranilji, good to have you.
Thanks for having me on the show. Thank you.
Thank you. My next speaker is Ms. Neha Oberoi, the CFO of Suzuki Motorcycle Private Limited India. Snehaji, good to have you.
Thank you. Good afternoon, everyone.
My next speaker is Mr. Umesh Revankar, Executive Vice Chairman, Shriram Finance. Umeshji, good to have you.
Yeah, thank you. My pleasure.
And my next speaker is Mr. Krishnan Sitaraman, the Senior Director and Chief Rating Officer, CRISIL Ratings. Krishnanji, good to have you on this show.
Thank you very much, Amol. Good afternoon, everyone.
Thank you. Thank you. And let me begin by saying that uh, till now, in the last 2 hours, the comments or the reactions that I have received from the market are quite positive, optimistic. Everybody is saying it's a big booster and perhaps a Triveni Sangam that the government of India has put through this budget. But let me learn it from you and try to understand where is this budget going to take all of us. And to start with, I have just one basic question to all of you. Maybe you can take 2 to 3 minutes to share your basic takeaways. What did you get out of this budget for you and your sector? And I will start with you, Tapan sir.
Thank you, Amol. I think for insurance, a big announcement of 100% FDI coming in. See, if you look at India as a country, and if you look at the way the growth is happening, we're already the fifth largest economy, going to become third largest economy. The insurance needs are huge. If I look at countries like US, they have 6,000 insurance companies. If I look at small countries also, they have 600, 700 insurance companies. India only has 70 insurance companies. And if I see the 100% FDI coming in, if I see the work happening from the government's perspective of attracting FDI or getting more companies to set up shop here, I would be surprised if we don't have 1,000 insurance companies in a decade's time. So this 100% FDI is obviously a big step in that direction, which is there. And if you have a country which is insured well, it's in the right direction of Viksit Bharat. I've mentioned in the past also, lack of insurance is also a leaking bucket. No, and the case in point is if you don't have a good health cover for everybody, then you have a drop of about 1.5% GDP growth, which is there. And then if you see the gig workers, no registering, and then you getting covered in the Prime Minister Health Scheme, which will be there, that is also is a booster which is happening. Or if you look in the tax reforms, the decision on the tax for reinsurance on the government thing, which was kind of an anomaly from the past, that also has been addressed. So from that perspective, good. Also, the talk on the rural economy, the talk on terms of using the dark savers to enhance there. I think inclusion at that level, pushing insurance penetration also would be a thing there. And disposable income in the middle class would also lead to a greater insurance penetration happening in the country. So overall, I think I'm very happy with the way the budget has been.
Oh, certainly. I think 1,000 insurance companies, your analysis sounds really, really optimistic and gigantic. I will come back to you on specifically those points, but let me move ahead. Indranil sir, what's your reading?
Well, I would obviously not be able to take a side of a sector, being a macroeconomist. So I think the critical call-outs for me is obviously the reforms process has been sort of forwarded in this budget. If you actually look at the last budget also, there was a very clear objective that was laid out, that the critical sectors that they are looking at in terms of the employment, the inclusiveness, the women and the youth power, etc. The steps that were being laid out in the budget, there was a very clear submission that these are the ones that will continue to be repeated in various budgets, and that's what we have also seen in the current budget. Plus, they had also indicated that there could be other areas that could be added, which I would say the export sector, productivity in the agriculture is something very important that gets a very critical mention over here. So if I have to look at the budget per se, I think very clearly the attempt is not only to correct for the cyclical slowdown that we see, and therefore the tax benefits that have gone out, which will definitely help sort of relatively boost consumption. The other perspective is to lay out very clearly a fundamental platform for India to grow.
Okay.
And that growth has to come in a more inclusive fashion, which also alludes to Mr. Tapan's points in terms of the insurance sector, which is very important. There's a relatively larger outlay that also goes out to education as well as healthcare,
Right.
which was clearly very important, and you couldn't have left that only to the states to actually boost that. What sounds a good bell for me also is the enhancement of the credit guarantee scheme for the MSMEs. That should lead, at least from a banking perspective, that should enable us to push more credit into the MSME sector, which actually is the growth center for India. It's not the large corporations which are actually the growth centers for India anymore. And more critically within the MSMEs, I think it is the enhancement of the threshold limits. That actually, in my opinion, can go a long way in improving the credit worthiness of the MSMEs. So I think, and on top of everything,
Right.
even with a relatively larger sort of capital expenditure, the finance minister has been able to hold the fiscal deficit as a proportion of GDP to a 4.4%,
Exactly.
which also sort of is a commendable task that has been achieved.
Certainly, I really like this statement of yours. Fundamental platform for India to grow. Interesting, Indranilji. Krishnan sir, let me come to you and take your views. You have been doing a great research specifically on the MSMEs, SMEs, and the NBFC side, right? So I'm sure there will be a lot of merit in the points that you will have.
Sure. So, thank you once again. I see my first impressions are that this is a budget is one which is characterized by the twin engines of fiscal prudence and reform orientation. So, on the fiscal prudence side, as the fiscal deficit is projected to be curtailed to 4.4% of GDP, what this would mean is that government borrowings will be under control. That will mean less crowding out of private borrowings. Hence, corporates will have more leeway to borrow, and interest rates will be under control. It should also support a rise in corporate bond issuances. More importantly, on the reform side, if I look at the financial sector, I see three broad areas where the finance minister has announced reforms. One from a sectoral development perspective, two from a tax reforms perspective, and three from a regulatory reforms perspective. Firstly, on if I look at the sectoral development front, I see six broad measures. One, the Grameen Credit Score Framework to serve the credit needs of the self-help group members and people in rural areas. Then we have NAPFID will be setting up a partial credit enhancement facility for corporate bonds for infrastructure. The central KYC registry is to be revamped and rolled out this year. There's a rationalization of the requirements and procedures for speedy approval of corporate mergers. And very importantly, as already mentioned, the FDI limit in insurance sector will be raised from 74 to 100%. And also another very important aspect is the measures to facilitate higher credit availability to the MSME sector. We have customized credit cards for micro enterprises, scheme to provide term loans to first-time entrepreneurs, and also the enhancement of credit availability with guarantee cover. If I look at next on the tax reform side, changes have been announced on direct taxes, and there is also a proposal to introduce a new income tax bill, which will hopefully rationalize the regime as a whole. Then I'll come to regulatory reforms. The endeavor here is, at least to objective wise, is to have a light touch regulatory framework based on principles and trust, And that, if materializes, it will support productivity and employment. Four specific announcements. One is the high-level committee on the non-financial sector regulatory reforms. There's this investment friendliness index for states that should help. There is a FSDC mechanism to evaluate impact of current financial regulations and what needs to be done, and also that Jan Vishwas Bill 2.0, which will decriminalize more than 100 provisions in various laws. So some of these are very kind of, I would say, noble intentions. The devil, of course, will lie in the implementation and execution. So if I give the benefit of the doubt there, I think, as I said earlier, it's more characterized by both fiscal prudence and reform orientation.
Certainly, certainly. We'll come back to you on that one specific part about the regulations and the new committee that the government is talking about. But thanks for adding that, Krishnan sir. Snehaji, can I have your take?
Yeah, if I talk about the complete budget, it is there are six focus areas which are taken care of, and if we analyze the budget, yes, of course, insurance is something which a greater benefit is given, but I think that there are various areas other than insurance also, like hotel, medical, education, and tourism. These kind of things are have given the specific attention in the budget, and I'm happy that the government has already started giving the skill development as one of the agenda they have taken, and they have continued it. So if you see in the budget, they had they are they are they are going to spend more on skill development, education, IITs, schooling, and other developments, and uh, that way, because that is something which is required at the corporate sector, that we need the people who can help, who can we need more technical hands in our business. So I think these kind of things, these kind of initiatives will definitely help. Above this, I just want to say that this budget which is presented is very fair, because the GDP expectation which is taken, and based on the global condition right now, that 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 ask that expectation is going in the right direction. Although little bit, I can still say that little bit still on the higher side, but it is more fair. So if I talk about this, and if we talk about government, know that the agriculture is the biggest sector who is helping in creating the uh, consumption for the society. So they have done various initiatives, and they have taken various steps for the agriculture and the farmers development, and for seafood, fishermen's, and dairy farming, and other areas also. And as a corporate, if I talk about I'm eyeing on the next taxation scheme which they are going to roll out. But definitely the confirmation which finance minister has given, that they reduce the laws by 0.5%. That is something which is really a good initiative.
Right.
Similarly, in TDS also, she was saying that the number of rates will be reduced. So all these things will definitely help for doing ease in the business, and they have taken, because the bigger perspective of the government is to bring in vehicles which are environmental friendly. So considering those aspects, they have given they have taken care of reducing the cost for electric vehicles also. So that way, I feel that, yeah, they have taken care of various sectors in this budget, because, yeah, that's good.
Certainly, certainly. I will come back to you again very specifically on those decriminalization part and what are the laws which they're trying to remove or removed already. Umesh sir, thank you so much for having your patience. Let me please allow you to go ahead with your takeaways now.
I think I'm very happy to be last among the panel because everyone has covered everything. There's nothing more to really add. But what I feel is the trying to give attention to boost the consumption itself
Right.
is a big change in the way a government is thinking because boost for consumption is going to bring in more private capex. What
Hmm.
was lacking in the last few years is private capex participation in the economic growth and activity. That is something I feel if the consumption goes up, private capex should come in a reasonably large scale, and that should virtually, help the economic activity to further boost from whatever the GDP growth number we have, 6% plus. We should be able to go another 0.5% more if the private capex participates by and large. So I think that is one attempt made by the finance minister to attract the private capex by boosting the consumption, and of course the various other measures in consumption by the increasing in tourism and rural focus, the attention to MSME, all those things are going to really have what to call some of everything and help the overall economic activity to grow. So that's my take.
Hmm. Sure. Noted your point so much, sir. I think let me get into some specific. I think those were really, really notable points that all of you have shared. But let me come back to you, Tapan sir, and try to understand more on the insurance part. So, when we say 100% FDI, that means that when foreign companies come to the India, they do not need any Indian partner. That's what will happen. So does that mean there will be more competition going ahead in the market? And how do you see the whole penetration aspect panning out? How do you see the fear or maybe the challenges for the private insurance companies? I can see the stock prices of a couple of private insurance companies are already down today.
See, Amol, first and foremost, why should competition be something in which you should be worried about? And you've heard me in the past also.
Right.
Wherever competition comes, it's good for customer. No, it's good for existing companies. Everybody is going to do something good for customers in terms of validation, bring something, new distribution, new morally. They'll think they'll have to push themselves.
Hmm.
And that is the way for success and the way for going forward. I've seen companies become much stronger, the good companies, with competition coming in. I've seen from the policyholder perspective, from the customer perspective, amazing products, amazing opening of distribution. I remember before 2001, I don't know how many of you would have had a motor claim before 2001. You would get your claim in about 4 months' time, and you were happy with it. Today, your claim is getting settled immediately. No, competition bought that in. If you remember, distribution before 2001 was only agency. Today, you have so many distribution. If you remember the number of lives covered in India before 2001, before private players came in, it was a minuscule. Today, about 60-70% of Indian lives are covered in terms of be it health, be it life insurance. Massive things have happened. Movement happened. Competition is good. Personally, as one of the leading insurance companies in India, also the chairman of the General Insurance Council, I'm excited. At least 1,000 companies should be in India. No, when you have
Right.
like Singapore having 500, 600 companies, UK having close to 1,000 companies, US having 6,000 companies, India having 70 companies for a country of India's size, magnitude, economic strength is not being able to completely. And look at the penetration level; it's still one of the lowest, in terms of where it should be. So there's an urgent need. And what we forget about the societal cause which the industry has to deliver and will deliver. In the economic growth also, uh, SME, MSME you're talking about, no, the growth. About 80-90% SME, MSMEs are not covered. When a Sikkim flood happens or an Uttarakhand flood happens, the budding entrepreneurs who wanted to become the next big industries, actually come on the street. They go bankrupt because
Right.
the insurance coverage is not there. It causes the economic 2% GDP fall in growth.
Hmm.
If you look at it, or if you don't have universal health cover, there's a fall on growth by 1.5%, which I call a leaking bucket. You
Hmm.
put all that together, I think Viksit Bharat cannot be Viksit Bharat. We don't have insurance cover for everybody in terms of beat health, beat all industry, beat all SME, MSME. It cannot be. It has a direct correlation to the economic growth also. So when you put all the data point together, the country
Absolutely.
requires 1,000 companies. That is the point I've been saying. And that's what I always keep on saying. And from a competition perspective, one should be excited, super excited about it. The
Hmm.
more the merrier. You get better, you get leaner, you get meaner, you get more smarter, you get It's always
Absolutely.
good. So that is how I see. So when you talk about stock market, actually get surprised. The stock market actually move up with more competition coming in at all points of time.
Certainly, I think that was really, really realistic and meaningful. And yes, you're right. I think in last 20 years we managed to build hardly 50 private insurance companies if you exclude those PSU companies. And even countries like Malaysia have more than 100 companies
Exactly.
specifically
No.
in insurance. Yes.
And Amol,
You,
before 1972, just one point, and then I know leave it to you.
uh,
See, before 1972, before nationalization of the general insurance company, see, life insurance got nationalized in 1956. Before
yes.
1972, in general insurance space in India, you had 107 companies. Just in general insurance,
Right.
forget life. Yeah. That was
Absolutely.
1972 before. Today, why should you only have 70 all put together? No? Is it not
Yes.
much below what it should be?
Absolutely. You mentioned about Vikasit Bharat, and that was my next question to you, Indranil, specifically on the Vikasit Bharat. If you look at the economic survey also, they have been, I mean, we are talking a lot about Vikasit Bharat, and everyone should, believe in that particular story. But let's look at the reality, Indranil. And, the CEA says that India should grow by 8%, if we have to become Vikasit Bharat in whatever the time frame that we are seeing. And we have to grow by 8% for next 10 years. But look at the predictions that of NSO, RBI, and even the government. It is not even crossing 7. It is between 6.5 to 10, 6.3 to 6.8. How do you look at the whole Vikasit Bharat story panning after the budget?
Well, Viksit Bharat is 2047, and it's a long way off. And obviously, you have to be a sprinter if you have to gain from the last few decades of demographic dividend. So that's one side of the story. I'll try and answer this question in a slightly different way for you. And I think you did talk about the 8% on one side and the 6.3 to a 6.5% on the other side. Economic survey puts it at 6.3 to 6.8%. Now, for me, more important is not the percentage growth number. More important for me as an economist is the quality of growth that you are achieving. So the moment you sort of post COVID, we have sort of coined this term of a K-shaped recovery, and the urban segment and the consumption in the services have actually been going up much significantly than what the rural economy is doing. Today, in the same breath, we have talked about urban consumption having come down. But the
Right.
problem is that the rural consumption has not picked up enough to take the slack from the urban consumption. So I think even if you look at the budget is also today clearly focusing on the stresses and the strains that are there in the rural economy and trying to make that better with the perspective of the per capita income sort of growing. And per capita income in India is, as per the latest data that we have, is $2,500
Right.
compared to similar triple B rated countries at 8,000 and $9,000. Now, that's where I think the problem for growth is. It's not in terms of I being the highest growing economy so far as the percentage growth is concerned. I would more bother about the quality of the growth. And to that extent, if I were to put some positives from this budget is trying to get the quality of the growth in a better shape than the quantity of the growth. And the moment you do these structural changes, the structural changes to bear you the right benefits and the fruits, there is a gestation period of 3 to 5 years, which necessarily also means that you continuously need to chip away at the reforms process, make existing programs sharper, do course corrections, and that's possibly another area that I would be looking at for the government, at least in the next three budgets that they come out during this tenure. And I would hope that any other government that comes, be it this one or any other alternative government, continues with the reforms process that has been launched. My last point here is that I think the building blocks or the bricks are getting laid now, and to build the building, yes, the focus is on 2047, but in the short term, given the global atmosphere being slightly more hostile than what we have been used to, especially in terms of deglobalization and sort of breaking down of the close knitting that emerging market economies had with advanced economies, obviously we'll have to factor in slightly lower growth. But
Right.
the spinning it out on the positive side, this budget has actually clearly focused on exports as a sector. It has stayed away from subvention measures, etc., which are only short term incentives for the export sector. The critical bit is now for the government to actually sign up FTAs, get newer markets, and all those are things that should be in the work for the Vikasit Bharat to be a reality for us.
Very meaningful one and retail one, Indranil. Very valid points. Krishnan, let me come back to you now. Answer the question that I have now is the biggest problem that India has been facing since last couple of years now is the private capex. We spoke a lot about how government should spend, and they have been maintaining some stance specifically when it comes to capex from the government side. But when you look at even greenfield capex or whitefield capex, the private companies are not coming forward. Umesh sir just slightly touched that point, but I want you to elaborate more on this. Do you think that this budget is going to push corporate India to think positively about private capex?
Sure, I think that's a very good question that you have asked. In fact, the private capex has been subdued for the last several years now. So much that when we look at our portfolio of rated companies, we rate around 7,000 odd companies. If I look at the median leverage level of those companies, that has come down from 1.1x 8 years back to around 0.45x now. So it's more than halved, which means that the borrowing levels of corporate India have come down, which is one of the key reasons for that is capex is low. Now, looking at the situation today and here on, we see that in certain sectors, capacity utilizations have gone up to a level which can I would say, encourage capex to start, which is typically in the region of 75 to 80%. If you see capacity utilizations happen, that's when companies think of starting with capex. And we have seen, I would say, green shoots of capex in certain sectors. That said, there is no, I would say, widespread start of capex now. We also believe that over the next maybe 2.5 years or so, we would see a steady increase in capex. If I look at the budget today, we are talking about an increase of around 10% in the capex target, 11.2 lakh crores for the coming fiscal. The government has announced a number of incentives, I would say, to boost domestic manufacturing, export competitiveness, particularly for the MSME sector. We do believe that this will in some way nudge the restart of private capex. Now, I think it will have some effect. But I will again want to preface it by saying that we don't expect a very wide or a sharp increase in capex or anything like that. It will be a gradual increase and spread over maybe say 2.5 to 3 years. What today's budget does is, because of the cut in tax rates, it will put more money in the hands of the consumer and should boost the consumption in the economy. And that, as a second order effect, in certain sectors, it could encourage capex to start. So, which will, because of the increase in capacity utilization. So, I said, in some way, it should encourage capex, but it will be spread out over a period of time.
Okay. Let's hope for that, because I think when we look at job as one of the important section, I absolutely believe that until and unless the companies won't expand, they will not go ahead. I think the job creation problem will not solve. Snehaji, I want you to explain more on specifically the ease of doing business point. The government has been talking about it, but what is happening on the field? Do you still feel that single window clearance is there or not, and how this particular decision of government of decriminalizing couple of laws will help you, because you are a CFO?
See, the thing is, if we talk about the environment created by the authorities, by the government, and the initiatives which they have taken, I must say that yes, they are taking a good initiative like Vishwas Se Vikas. That was one of the schemes which have been started, and then GST rolled out, and then there is faceless assessments. So all these things which has helped in creating a environment, because those things were not there earlier. So things has been started and then the initiatives are taken to improve it. If I talk about the changes which has happened, the complete GST changes from the year it has been introduced until today, there are lots of changes which has happened, and which has happened for the benefit of everyone, not only for the corporate but for the authorities also. There are various ways, various new introductions which has done to
Hmm.
streamline the process. So that way I can say that yes, actions are taken. uh, but for faceless assessments, I think faceless assessments still need some more uh, uh, technical expertise when the assessor is there on the other side, because this is something a very new concept, and I'm sure that some actions will be taken in those areas also. And if we talk about in other areas like electric vehicle or investment in the country by foreign companies, yes, we have seen that the single window has come up, and they have supported in investment part. For taxation part, still I think that that single window thing is little tough and not uh, came up right now. Taxation, I'm not talking about new investment taxation, I'm talking about the regular during the continuous business, when you are doing the business at that time.
Hmm.
So that is something which need attention. So
Hmm.
yes, the,
Okay.
the things have improved, but there is a there is a long way to go.
No, certainly long way to go. Certainly, for sure. In fact, the chief economic advisor has also, spoken specifically about that. In fact, the whole theme of the economic survey is, the
Yes,
deregulation. In fact, he used this
yes,
term called
yes.
out of the business. Uh,
But
and
in
when
budget, it is
specifically,
not there. But in budget, it was not there.
Exactly. So you still have very kind words, but I still remember one of the CFO earlier said in one of my panel that you don't talk about faceless, nothing happens even in face to face. So I don't think even faceless anything will happen there. But noted your points. Thank you for adding that. Umesh ji, very important question to you. At one side, we are trying to push MSMEs to a next level. Which is very good. In fact, this budget also does that. But on the other side, we have been worried now specifically about the delinquencies that the MSMEs might come up with. Second, the business models, and ultimately the raising funds and all those issues those MSMEs are also facing. So, how do you see after this budget, perhaps the whole MSME segment will pan out? If I ask you as a typical lender, how will you glance those MSMEs through your credit lens?
See, basically, what happens is the way MSME or self-employed or individuals are looked into in the eyes of the lender through RBI's guidelines or RBI's rule regulation. So
Hmm.
that's how. See, we don't. Our looking at a particular credit will be from a different angle, but there are framework in which through which we have to. So lens is not ours; it is
Okay.
sometimes regulated. Now
Hmm.
MSME, what happens? There is a cash flow mismatches in MSME because they are squeezed between two. They normally are sometimes supplied to the large corporates, and sometimes they also access to small customers
Hmm.
where they have a credit provided for certain things. So what happens? Their cash flow gets stretched between two. The bigger companies, they always have the cash surplus situation,
Hmm.
or they don't really no, they work on somebody's working capital, and these smaller customers, sometimes the supplier, you have to provide better credit facilities for cash flow facilities to them so that you manage in between. So the cash flow gets stretched in these circumstances for all
Okay.
MSMEs, and therefore there will be some delays. And this, uh, when you put in a lens of large corporate, MSME, and individuals in the same framework, then it will look as if MSME credit is little weaker or your gross stage 3 or a little higher. But that is
Hmm.
not the way to look at, because the margins when you lend to MSME, the lending rates are different. You'll be obviously charging more. So definitely you have to anticipate little more what call credit cost or the higher stage three there. And when you put the net part of it, then if it is making sense, then I feel MSME is a good lending. So we always allow that kind of a adjustment. So we are not really, go through this same yardstick as what we look at large corporate and MSME and individuals. So therefore, I think in the broader paper, everyone wants to put, oh, MSME the credit cost is going up or stage three is going up. There is a risk there. That's how people opine, and
Right.
they don't make adjustment for the margins what they provide and the kind of business which they are in. So therefore, I think there is always a debate and discussion whether the MSME is a weaker
Hmm.
compared to the large corporates. So the way we everyone looks at
Hmm.
in a different angle, maybe
Okay.
Krishnan will have a final opinion on the same because they are the people who look into both sides, the
Right.
expectation part and look into the reality. So and he'll be able to really tell. But I feel MSME are a good bet because they give a little good better yield. So you have to look into them in a little different angle, and they are necessary, and they are the
Certainly.
part and parcel of growth of the country, and they provide the real time the employment. So the government has to give a little more what call scope for them in the form of either credit guarantee or in the form of subsidies on their lending rate. So something continuously need to be given by the government so that the MSME segment succeeds.
Hmm. I think you mentioned Krishnan's name twice, so
Yeah,
let me get him here
sure.
and maybe take his point if he
Yeah.
wants to add something. Yes,
Uh,
please go ahead,
I,
Krishnan, sir.
Yeah, sure. I completely agree with what Mr. Revankar said. See, MSME is a very integral important part of the Indian economy. 6.4 million, 6.4 crore MSMEs are there. If you look at their contribution in employment generation, in exports, overall economy, a significant proportion is there. And when we look at their actual operations, many of the MSMEs that we look at are very efficient in their operations. Their key, I would say, challenge, I would say, is access to funding, whether it is equity or debt. So, if that is available in a very robust manner, then definitely the ability of them to thrive will go up. So, one is, as I said, equity and debt funding is important. The other thing is on their debtor side. Many of their purchasers, many of their customers don't release their payments on time, so the debtor level goes up and they get squeezed. So that is another aspect which the SMEs face challenge in. But I think if we address the funding availability, that will be a major support to MSMEs, and for our economy to grow at a robust rate. A thriving MSME sector is very important. To that aspect, as Mr. Revankar rightly points out, some of the schemes which have been talked about today in terms of funding availability, increase in the guarantee cover. So those are steps, I would say, still baby steps, but at least some steps to enhance the funding availability. Again, some of these schemes, the devil will lie in the detail, how it is implemented, how it's executed. In the past also, some schemes have been announced, but the successful execution has been a challenge. So we'll need to kind of monitor this, see how it evolves. But I think full marks to the thought process and the kind of at least the announcements and the measures which have been talked about today.
Certainly, certainly. Let me come back to you, Tapan sir, and shoot this question quickly. I understand that you have to leave, but the question is specifically on the whole. I mean, India or largely Indians look at insurance as one of the tax-saving product, and that's why the demand was, the ATC limit should be increased so that life insurance product could be part of it. ATD limit should have been increased so that health insurance products could have been part of it, but that has not been happening. In fact, government came with two tax, saving schemes for the people at large. My question to you now is it that now that given the fact the government doesn't want to look at ATC, ATD and wants people to look at insurance as an insurance product and not a typical tax saving product, and that's how the insurance companies should prepare now going ahead, sir?
Oh, thank you, Amol. I think first, after you talked about stock market price, I started checking some company stock market price. That has actually moved up, Amol. So, see, I take
Okay,
all your
that's
feedback so
that, that's how the
seriously.
volatility of the stock market is. Maybe they heard you what you were saying.
So that I noticed.
Okay.
The second thing is, see, if you look at it, is a question of affordability now is what I've been trying to take up as a as a thought leader for insurance industries. The GST on health, 18% on something as health insurance, and we all feel that is very critical for everybody. So is it justified? That is the question that we have been asking. That should be no rationalized now. Do we understand that societal needs is what insurance industry has been created for? If I go back hundreds of years, how did the insurance industry got created? It was created for societal needs. That a big loss of some individuals or some factory or some company gets distributed in terms of that a lot of people collectively pay money and you don't know whose loss will it be. And something wrong happens with somebody, that money goes to that person's, no, or that company's or that industry's favor. That is what the purpose of insurance is. Once you understand the societal need, then to see it as a mechanism of no, in terms of taxing it at an 18% rate, or as a mechanism of not seeing that what can be done to increase its penetration at the highest level. That is something which as an industry we always felt it should be taken care of or built together. We should not see insurance as just purely a business. It is there for societal need, or we should alternate methodology of societal needs that should be able to take care and so on. So if you look at all developed countries, you'll see the insurance penetration at a very high level. You'll see that nearly everybody is covered for, no? Let's take a case of US. You have insurance for all, health insurance for all. You have even something like a home insurance has a 95% penetration, no, which would be happening there. So when you see a developed country and we talk of Viksit Bharat, that has to be there. And these are mechanisms to see how do we increase penetration to that kind of level where it serves a purpose. So that is where the industry has always been speaking about it and has been asking about it. But
Right.
again, the government has its own constraints. They'll try to do what best they can do, and they have their own priorities. They look into that. But from an industry perspective, we shall be, we shall keep on asking in terms of what we feel would help the insurance industry to push penetration to the next level.
Okay, sure, Tapan sir. Thank you so much for your time. Let me move ahead with the
Thank you.
panelists with the other
So,
questions, but thank you so much for your time, sir.
thank you, Amal. My honor. Thank you.
Thank you. Indranil sir, let me shoot again another question to you, which I partly asked Krishnan sir on the private capex. You very well described the macroeconomic situations, but do you think this budget is actually providing enough stimulus to the private sector for investment and job creation, and do the structural thinking as going ahead? Because sometimes a lot of companies also thought that they have a dry powder, but they did not go ahead because of a lot of structural issues. Do you think that they will get enough confidence now?
Well, I think it's a difficult question that you've asked, in the
Mhm.
sense that the government sector is trying to create a public good, but the private corporate sector would be looking more at the profitability perspective.
Hmm.
Now, the issue is that while it is easy for the government, therefore, to push infrastructure, a
Hmm.
private sector will only come and put up additional capacity only if it sees adequate demand or a visibility of a sort of multi-year growth in demand, so to
Hmm.
say. So here, if we break the situation into two parts, one is the external demand, and the second is the internal demand. Now,
Hmm.
external demand probably for this calendar year at least is likely to stay weak unless we have some stabilization happening in the global perspective in terms of Trump policies. We are able to understand what are the tariff implications,
Right.
and therefore what are the supply chain sort of constraints that get recreated in the global atmosphere will determine what is the type of external demand that domestic manufacturers will see. Now, therefore, if you leave it to the internal cycle, the only way that private capex can increase and people will be willing to add capacity is not because of the pricing to add the capacity. So therefore, I'm not really saying that interest rates have to come down for the private sector to add capacity. We have seen occasions when interest rates have been on a real basis on the positive side and investments have happened. It is more boiling down, therefore, to the demand in the economy. And that, I think, is what this budget is trying to attempt. One, as I said at the very beginning, the cyclical perspectives, which is basically trying to put hands in the money in the hands of the consumers, and therefore the consumption push happens, to be also helped by the fact that we are looking at other enablers on the agricultural side, which will probably keep restrictions on the prices or the rate at which prices in the agricultural produce moves. For example, if you are looking at clearly energizing the pulses and the edible oils, our reliance on pulses and edible oils from the global sources will come down. They have also allowed for procurement of the pulses, which in my sort of thought process, I don't think we have been procuring pulses. Most of the procurement has been happening in terms of the cereals, rice, and the wheat. So once we are able to develop a sort of a pool in terms of the carrying stock of, say, even pulses, which is not going to happen in the next year, and therefore we have a more stable inflation atmosphere, the consumption will to that extent also increase. Now, the other reason why consumption today is muted is companies face cost pressures. Therefore, the rate at which nominal wages are going up is low, but your inflation is high, which is actually pulling down the real wage growth in the negative territory. And this is not only the urban, but also the agriculture as well as the non-agricultural labor data that we see. So some of these issues through these reforms measures, one, inflation coming down, therefore giving a fillip to the real wage growth in the economy, and the consumption bias that has been put, all should be together, and also not to forget the ease of doing business and the relative visibility of the tax administration, which is also very important for businesses to actually take the right business decisions and therefore to plan ahead. These are some of the factors which will enable private capex to actually come in.
No, certainly, that was a very important topic. So I took your view as well, along with Krishnan sir. So Krishnan sir, let me come back to you now, and perhaps a very important question. Though there are no major details given into the budget document, but the finance minister has mentioned about. I mean, there is going to be a focus on high-level committee for regulatory reforms, investment friendliness, index of states, FSDC mechanism, and everything. How do what is your guess? What is it going to be? Are they going to make regulators accountable? Are they going to make a regulatory body seamless so that the industry can blossom? What is your guess?
So difficult to say, but whatever I heard from her, the finance minister today, was the endeavor seems to be to have a light touch regulatory framework, and that would be based on principles of principles and trust rather than a rules based regulatory framework. Again, this is one of the endeavors to move ahead with the ease of doing business, to increase the ease of doing business. And if executed well, it can help support productivity and employment. So this high-level committee has been referred to for the non-financial sector. And I think what it will do is identify the pain points, the areas where we could have more streamlined operations, where probably it is taking too much time for approvals to be given, or too many approvals are needed in certain instances. So how can we kind of bring those together or make it more efficient, speeden things up a bit, catalyze the ease of doing business? Put in another way, try to overcome bureaucratic bottlenecks. So I think the objective of this committee would be some of these. And I'm quite hopeful that it will come up with recommendations which can, if implemented well, increase the ease of doing business. I think it is this entire proposition is broadly aligned with the government's broader agenda to reduce regulatory interventions and increase economic efficiency across industries. So they talk about is minimum government interference, and which will essentially leave the entrepreneurial kind of class to move ahead with the most efficient operations. So to have as a minimum a level of regulatory interference as possible. So I think that is an ask for this committee. We'll have to see how how they look into the matters, what kind of recommendations come out, and how the implementation is. I think this is a matter for the medium term. So it will, of course, be some time when the committee is constituted. It looks into various aspects, comes out with its recommendation, and then we'll have to figure out how the implementation happens. But at least a step in the right direction.
Absolutely. I think CFOs, the Indian community, will look at it far more diligently for sure. And that's the similar question to you, Snehaji. Now, I think you have highlighted a couple of points, but given the background that government is going to invest heavily, capex is going to be there, growth projections are there, decriminalization laws will be there, which will remove a lot of things, and let's hope single window clearance will come. And as Krishnan sir explained, what it could be, the single touch regulations. Does this make a CFO very confident to put private capex or to put money or pump into the capital and expand heavily, you or maybe your community?
It's a tough question, but yeah. See, the thing is, it all depends how the growth is going and how the things are moving. Because yes, whenever there is infrastructure development point came, it is always expected that private sector also come forward and do as much as uh, investment as possible. And many times, private sector is uh, uh, supporting in that initiative also, but private sector cannot run on just to give a just to help them to boost the morale. Profit is also required. So I think the incentives, PLI schemes which were announced earlier, I think that kind of same schemes need to be announced again, especially when if I talk about automobile, uh, we are talking about EV, green energy, and other things. I think for capex of electronic items, sorry, electric for manufacturing of electric vehicles, that also need to be considered. That it required a heavy capital investment.
Hmm.
It's something new technology. It is an investment in the new technology which needs support. So these kind of things, once it is there, yes, definitely wherever required and whenever
Okay.
possible, that when we see the growth, then definitely the investment would be there from the private sector also. But
Hmm.
uh, there are other factors also which definitely as a CFO, not only me, but definitely the entire fraternity is also looking at and
Great.
check before signing the capital investment in the organization. Yeah.
Hmm. So Umeshji, Sneha is not very sure about whether they will go to the bankers and look for a bigger checks. I'm not sure about it. The question to you is: credit growth has come down significantly in the last couple of years. Do you see after this budget credit growth will improve going further? This is again a second side of maybe the private capex question, but that's it. I would like you to go ahead and explain your point of view there.
Now, see, credit growth from the corporate has slowed down, but the other credit growth, individual and the small borrowers, that has gone up in the last couple of years. So you are right. So when Krishnan was mentioning about the capex, that the credit growth from the corporate, both equity and borrowing from the bank has come down. It is mainly because they did not see a bigger opportunity and bigger consumption and more different what call more saleable products maybe. That could be the reason. So we are not
Right.
sure why private capex is not getting into active mode, which was the case in the past. In the past, if you see, moment they reach 70% of their capacity or 75%, they plan for next investment. Today,
Exactly.
even at 85, many of the corporates are not really wanting or really delaying their projects. So
Mm.
there must be some reason. And this kind of a decriminalization, ease of doing business, creating an environment that is very positive
Mm.
should encourage more private capex to come into
Mm.
play. So that is what the government is trying to do, and I think this is the right way to at least you put the
Right.
banner and no, announce that we would like more private capex to come in, and you will be treated honorably. That's very important, because if there in businesses some business fail, you should not be treating them as no criminals, or you should not be treating them very badly. That's what has happened in the in between. The sentiments were weak for the corporate or even the entrepreneurial people to come aggressively, put something new and start something new. Like imagine 25, 30 years.
Right.
Just like that, Nirma came and challenged the levers. So,
Mm.
not levers, your what you call, um, yeah, yeah, the Hindustan levers, yeah. So,
Yes.
see, that kind of a challenging environment you don't see, and they were just selling their what you call detergent on the cycle, and over the period they came and gave that kind of a
Another point. Yes.
challenge. So this kind of a challenges, this kind of a entrepreneurship is missing in the last few years. It requires an environment which encourages people to come and challenge the established player, and that will change the order of the game. So that's something the environment has to be encouraged, and government is trying to do that, I believe. And these are all a few announcements should make more entrepreneurs to get into the game.
Mm. Certainly, I think that those were really valid points from all of you. If I think if we put it maybe simply, there are many positive factors, good announcements. Perhaps not the best, but as Indranil said, sir said sometime back, it's we are building the bricks. Bricks are getting built, are laid. I think that's how I put it. The good part is perhaps there is no negative thought about it, or there are no bad news for sure, at least I think, and let's be happy with that. So thank you so much, Umesh sir, Indranil sir, Krishnan sir, and Sneha ma'am, for
Thank you.
sharing those meaningful and relevant thoughts here on ETBFSI and ETCFO platform. Thank you so much.
Thank you.
Thank you
Thank you
very
so
much.
much. Thank
Thank
you.
you. Thank you. Thank you very much. Thank you.